its hands are tied. It can't ease and tighten simultaneously, so the bailouts are off the table. Now, interest rates are going up. That means the government, just like Greece, is going to have to default. It's going to have to restructure the debt and pay less than 100 cents on the dollar, just like Greece. That's what's going to happen if Ben Bernanke does the right thing. It's going to be a painful restructuring because, again, we put on all this extra weight before we decide to go on a diet. So it's going to be a much worse diet because we're starting from such a high level of obesity. The other alternative is Ben Bernanke, oh, we can't do that. We can't let interest rates go up like that. We can't let these banks fail. And of course, when the banks fail, it's not going to just be shareholders that lose money. It's not just going to be the bondholders that lose money. It's going to be the depositors who lose money, average voters. Now you might say, well, the FDIC has that insured. Well, yeah, but the FDIC has no money. Where's it going to get it? Now they're counting on getting it from the Fed, but if the Fed is tightening, it can't put any money into the FDIC. Where's the government? Is the Treasury going to have money to put in the FDIC? No, the Treasury is broke. So without that printing press, these are massive collapses. I mean, the losses are going to be enormous. It's going to dwarf what was lost during the Great Depression. During the Great Depression, only 2% of bank deposits were lost. That's tiny compared to what's coming now. If we don't, if we don't create massive inflation, which of course is worse. So the Fed is either going to have to allow a much worse recession than we would have had in 2008 if it had simply allowed it, or in 2001. And again, it hasn't done that yet. But either it's going to have to do that, or the alternative is, oh my God, this is way too terrible. We have to keep buying all these bonds that nobody wants. Well, the minute they do that, the minute the Fed starts buying even more, and this would be the official launch of QE3, or maybe it'll be a bigger number. It'll be more QEs than Rocky movies probably. But what happens is they start buying all these treasuries. And of course, in order to buy the treasury, they got to print money. And now that money is less valuable, which means the treasuries are less valuable because they're dollar denominated. But now that you see what's going on, the Fed is allowing, because at some point the inflation is so bad, right, that people know, okay, who are you kidding? I mean, there's inflation. And now the Fed has to not do anything about it. It has to keep denying it and looking like idiots. Or the Fed is going to say something like, a little inflation is not that bad. Okay, so we're going to have a little bit of inflation, and that's going to destroy their credibility. And so when people start to realize that, look, they're full of it, they're just creating inflation. They've just been lying about it. Well, they start dumping treasuries. Okay, well, the Fed is printing money to buy treasuries. But now, what if you own corporate bonds? Well, you're not going to hold on to corporate bonds. I mean, you got a corporate bond that's yielding 5%. Inflation is 10 or 15%. You're not going to hold on to that thing and clip those two bonds. So now corporate rates really start to go up. Now that's crushing the economy. What is the Fed going to do to keep corporate rates from going up? Well, it's going to have to start doing QE and buying up bonds, General Electric, or it's going to have to start buying corporate paper. What about the states? What about the municipal bonds? Who is going to want to buy muni bonds? Is someone going to buy a muni bond yielding 3 or 4% if they know inflation is 10% or 15%? No. So then what? If the Fed wants to keep the yields down to the states, because if interest rates go up for the states are going to be filing bankruptcy. You think California can afford to pay 10% on its debt? Not even close. I mean, so then, if the Fed is going to go this route, then it's going to have to start buying up all the muni bonds. Well, now its balance sheet is exploding out of control, and now the dollar is really under pressure because it has to keep printing them. And the Fed doesn't become the lender of last resort. It's of only resort. It becomes the only buyer. And then, of course, foreign central banks are going to figure this out. That everyone's the last man out, and everyone's going to want out of their dollars. What is the Fed going to start printing money to buy all the treasuries and all the dollars, off the, all the bonds off the Bank of Japan, the Bank of China? And if they do that, then they destroy the dollar. And then the economic calamity and political obligation denominated in U.S. dollars, even if it's short term. So, you want to get out of the dollar, you want to own gold and silver. I think gold mining stocks are great